Bond markets are broken, stock markets are broken, and we are staring down the barrel of hyperinflation. And this is clearly evident if you know where to look, according to Jim Willie, who's the outspoken market commentator on the goldenjackass.com and author of the Hat Trick Letter, and my guest in this video. And if you want to see more interviews with thought leaders and experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. Jim Willie, welcome to GoldCore TV.
Oh, it's good to be on, David.
Well, it's great to have you. Now, just to set the tone of this conversation, we've got at this moment in time, we've got bond yields rising. We saw the 10-year going up over 175 at this stage. We've got stocks continuing their bull run. We've got money printing out of control, and we've got inflation rising. At the same time, we have a Federal Reserve as well as other central banks who are saying they're not really paying much attention to inflation. On top of that, we've got money flowing from west to east. Now, in normal times, the alarm bells would be ringing, but this is against the backdrop of COVID-19. So tell me, Jim, what could possibly go wrong?
Just about everything. I don't mean to be facetious, but everything is breaking. The list you gave is partial, and you could go on and say the silver market is all jammed up. The crypto market is a relief valve. There's tremendous distrust of this Biden administration. I prefer to call it a regime because it's basically built upon a California movie set. Everything is breaking. The dollar is being rejected. Very few people remember that a little over a year ago, the Belt and Road was going great guns, full speed, and they announced a full year 2019 total trade, not balance, total trade payments of 1.3 trillion. Okay, so there's a lot going on. And just before that, you had the repo market for the US Treasuries. That was about September or October of 19. That exploded. What could go wrong? Everything. For the things that the markets that you mentioned, we have a dollar that's teetering. And for those who say to me, gee, Jim, I think the dollar's going to just break down and fall apart and decline badly. I say, against what? And what is your measure? If it's the dollar index, then I don't think your argument makes much sense because the Forex has a monopoly. So if the dollar declines with respect to the DXY, the dollar index, then the euro will rise. And Germany won't permit the euro from rising much. Well, they won't permit that at all. In fact, that happened way back in 2000 and I think it was 2005 or 6. And I got into a big debate with somebody, a former German CEO, and he told me, we'll never see the interest rates decline. We will never see it. We won't match the United States. I said, well, yeah, you will, because the euro will rise. The euro will not be permitted to rise, which means the dollar will not be permitted to fall. You have to think in terms of the Forex bounded market, bounded arena. Okay, we've got the biggest new thing, the new phenomenon, new factor on the scene is this attempt for yield curve control. It came out with a new acronym, YCC. It's not successful. What they want to do is to prevent the short-term yields, like under a year. They don't want it to go zipping way above the long-term yield, like the 30-year or the 10-year, because they've got the 10 and the 30 under control. So they needed to control all of it. You don't want to have the 1-year bond yield way above the 10-year. I mean, you can't. So they needed to do a complete yield curve control, and it's not working very well. It's kind of funny. People say, gosh, we get fast rising bond yields. The 10-year is up to like 1.7, 1.8, 1.9. And I say, yeah, unless it gets toward 12, it still falls. We got inflation that's about 8 or 10 or 12%.
What do you mean by that,
Inflation.
Jim, when you say unless it gets say 10 or 12, it falls? Just explain that for our listeners there for a sec.
Gasoline is way up. What's not up in price by 10, 15%? What? Okay, we've got a phenomenon that I noticed a long time ago when I started the newsletter in 2004. We got individual components that are showing this amount of rise in inflation, but the overall index is way down here.
Yeah.
Okay, so the components, you just take a look at the three major components, and that should tell you where your index should be, but it's never the case. Now they're looking to doctor the consumer price index in new ways, because they don't want it to say 6%. You cannot have the bond yield on the 10-year at under 2 and the consumer price inflation at 6, 8, 10%. It's been at least 8%, 7, 8, 9% every single year since 2000. Every single year since 2000, which means that their estimates of the gross domestic product, the economic growth, it's been wrong by at least 4%, 5% every single year. We've been in a tremendous, grotesque decline in the economy. I think by about 3 to 6% decline every single year since before Lehman hit. We've essentially got about a 20 or 30% economic decline in the last 15 years. Maybe more. Okay, the economic statistics are not just off, they're grotesquely off, and they're off by orders of magnitude like 5 and 10 times.
In terms of just getting back to the market for a moment, right? And we're seeing all of these problems. We're seeing the bond yields rising. We're seeing the stocks. We're seeing bubbles continuing, right? We're seeing money printing. We've had a $1.9 trillion package come from the Biden administration. And we've got this infrastructure package in the making here as well, which is just even more money flowing in. At what point do we actually see this thing starting to crack?
About 6 months ago.
Okay.
It began cracking when they decided to do the $1 trillion stimulus. For the last 10 years, the word stimulus has been abused. It's more like patchwork. This is a very big dike, and they don't have even remotely enough fingers to fill the holes. The stimulus package was a relief package and banker welfare. The relief to the individuals was puny. It might have been 1,000, might have been 2,000 per household, but if the average take-home income is 4,000 or 5,000 a month, what good is that? I contacted my bank back in August, and I was told, "Sorry, Jim, we cannot provide you that package because we ran out of our quota at our bank." And I said, "Did the big banks run out of their quota for trillions?" And they said, I don't know, but sorry, we cannot help you with this payroll protection program. There's nothing for you." Okay, so that's not stimulus, and it's hardly even relief. But things are breaking everywhere. Just look at the government debt for the United States. Look at the percentage of the budget which is turning out to be deficit. It's over 50%. It's closing in on 60%. The last year, I think they had, I'm not sure. I don't know. I mean, what's another trillion? Okay. Was it a $3 trillion deficit, or was it a $5 trillion deficit in the last fiscal year? And I would like to, I don't want to sound like I've got too many answers, but if you stacked $1 bills and had 1 million of them, you'd be at the height of the Empire State Building.
Yeah.
If you stacked 1 billion, you'd be out to the stratosphere. If you stacked 1 trillion, you'd be a quarter of the way to the moon. 1 trillion is a big number. And we got about 4 or 5 or 3 or 3.5. Who knows? We can't even count the deficit anymore. It's in the trillions. So I say we're already breaking. We've had treasury bond auctions, by the way, in the last 2 weeks, and every one of them has been a failure. They're now, and what does that mean? I mean, gosh, we don't even get accurate press reports for this breakdown. So it started breaking down a long time ago. The primary dealers, by contract, have to buy whatever bonds are not sold at the auction, and they're being stuffed down their throats. We might see the death of a couple of bond dealers, primary bond dealers. It's breaking everywhere. The dollar is a joke. I mean, look, what's the relief valve for the dollar but cryptos, the Bitcoin? Bitcoin is up, what is it, 12-fold since 3 years ago? I mean, everything's breaking, David, everything.
Just talk about crypto for a moment. And we are seeing a massive rally in crypto over the last 18 months in particular. And it is in response, going lockstep with the stimulus plans and the printing of money.
Yes, it is.
Is it being allowed to do that at the moment, do you think?
I think it's being allowed because they can't do anything to prevent it. I'm going to put out a couple of different theories, maybe 3 theories. First of all, with all the money printing, there has to be a relief valve. There has to be a leakage and a bucket to collect it. And I think since gold and silver are being absolutely blasted to the wall with prevention and now shortages, there's a path of least resistance with the Bitcoin. Furthermore, the dollar is losing its prestige and credibility. So there's escape from the dollar, while the treasury bond has lost its prestige and credibility with the yield curve control. So where's the escape route? I think it's with Bitcoin. I don't actually like the cryptocurrencies. I like the crypto tokens, like Theta. I think Theta is going to, just a quick, they're going to redefine the new internet. The next generation internet is going to be built with components by Theta for video streaming, for quick peer-to-peer transactions and much cheaper, and for expanding the bandwidth with these edge nodes, where you're going to have the internet capacity growing in a tremendous decentralization. Theta is behind a lot of that, and I think it's going to sound weird, but I think it's going to go up 100-fold in the next 2 to 3 years. 100-fold. Okay, so one of the toughest questions I got a few days ago with a consult was, Jim, I've got $140,000 that's coming from, and it's going to be like in the next few days. It's from a property sale. And cover the mortgage, and this is the excess in my hands. I'm thinking of buying a bunch of silver coins, but should I really get also some Theta? And I said, yeah, I'd almost go half and half. Buy a bunch of Theta, buy a bunch of silver coins, and then you get a very real problem. Where do you get the silver coins? Everybody is out. So you've got growing demand for silver, you've got non-existing supply, and you've got falling price. Did you learn that in your economics course? Okay, what they're trying to do is eliminate supply for gold and silver, especially silver, so that you lose interest. And I tell people, don't lose interest. Bang on their doors. Don't lose interest. Write your congressman. Don't lose interest. Urge the military to enter the arena for national security purposes in the silver market. They need it for missiles. They need it for guidance systems. They need it for electronics. Silver is, I think it's going to cause the breakdown. I don't think it's going to be gold.
You think it's silver, yeah?
Yeah. The shortages are acute. The U.S. Mint is canceling orders. The Royal Canadian Mint is doing even worse. They're taking payments for orders and not delivering. They got lawsuits now. They took the money. They're not giving it back. Okay, this is really sickening. I think we're going to see, just my quick opinion, I think we're going to see a breakdown in the COMEX. I think it's going to be accompanied by lawsuits. And I think some big players are going to be behind it. And they're going to say, we've had enough of this. We need an honest market. We need the price to go up. And I think the next stop is 35 to 50. More like 40 to 50.
And when you say breakdown in the COMEX, how do you envisage that happening?
A default, an open, admitted default. We don't have it. We cannot meet these orders. We must stop taking new orders. A complete fracture and shutting down of its function, and with accompanied lawsuits. Okay. And you know, they're going to try to say for national security purposes, we cannot do this, and it's all force majeure. And I'm saying for national security purposes, we need to shut you down. This is going to get very, very hairy.
Now, the COMEX, it does serve, one of the purposes that it serves is price discovery. If we see a complete shutdown of the COMEX, how do we have good price discovery in the silver market then?
We don't have any discovery in the silver market. We have control. Okay, discovery implies that you seek out the equilibrium point for supply and demand in order to enable supply to flow and to enable the orders to be filled. We don't have even remotely price discovery, and we have not probably for, 8 or 10 years. So a discovery would say, whoa, we are now discovering that an equilibrium can come about at the $45 price. That would be discovery. What you're seeing now is, they have the control mechanism in, and looks like they don't want $30. That's a control response. They will not permit $30. That's a control response. It's not a discovery. I'd love to see a discovery mechanism. I mean, I would like to see 7 different points on the globe: Hong Kong, Shanghai, Australia, New York, Toronto, London, Zurich. Let's all have a discovery episode, and let's average the silver price where they actually have orders filled. If you don't fill an order,
physical discovery or price discovery on the physical.
Yeah, there's no discovery. The paper side, that's not discovery. That's control. That's naked shorting. That's naked shorting. It's permitted naked shorting, and the regulators are letting it happen. And look what happened when they tried to do a Reddit a Reddit raid on silver. They just shorted the living daylights out of it, and I believe they had 2 years of supply sold in paper in 1 week. That's not discovery. That's control.
Back to just talking about bond yields for a moment, because as we were saying, we're getting more money printing here, and we've got bond yields. We just take the 10-year, for example, up at 175. We've got this massive debt in the States. Unbelievable, historic levels, never seen before. At what level does this actually start to become a problem? At what level of bond yield, say in the 10-year, does this start to actually become a problem where they are struggling to finance covering the interest on the bond yields with taxation? We're probably not too far off that, would you say?
No, they can't cover it with taxation. When does it become a problem? 6 months ago. Same answer. It's been a problem for a long time. Been a problem since September. Been a problem since June. We're in crisis mode constantly, and it's just getting worse. People are waiting to see when it's going to become a crisis. Well, it's already a crisis, and it's been a crisis. Maybe the question is really, at what point do things fracture in the bond market?
Yeah, exactly.
To the point where everybody is concluding this is out of control. I mean, everybody. Because right now you got a quarter of the people watching saying this is out of control. And I'm among the quarter. We're in Weimar. I call this Weimar America. I called it Weimar America last April. Why did I do that? Because we were out of control and it was breaking. So we've been, for a year, we've been out of control and broken. But as for maybe out of control and exploding in front of our eyes, I think we're starting to see that right now with the yield curve. The yield curve control was an effort to make policy an emergency status like DEFCON 3. Okay, how's it working? Well, it's not working very well. Okay, so their DEFCON 3 is not working. We'll go to DEFCON 4. What is that? I don't know. We've never been there before in the bond market. I think we're getting very close to admitting that the Treasury bonds are going to be forced into a 30% haircut.
Wow.
And I don't know what that's going to do to the bond yields. When people say to me, Jim, don't you think interest rates are going to go up a good deal this year? No, they can't. The debt's too high.
Yeah.
They can't manage the deficit. The deficit will be bigger than all the spending. I mean, it's getting out of control in a way that is widespread, recognizable. When you start to see people who are not financial experts say, this looks broken, then you'll know that it's all irreparable and we need the reset.
So ultimately, I mean, everything that you're talking leads to something. You talk about the Weimar US. So we're looking down the barrel of hyperinflation. We see a bond market that is utterly broken. You can argue as well that the stock market is broken. We have the massive money printing, which is sending other asset classes like Bitcoin through the roof as well. We're saying, you're suggesting that it's 6 months ago, this is when the whole thing started to crack, or longer. Yeah. But it can't continue. Once it gets to that point where the man in the street is saying, can you explain this to me? It doesn't make sense. And you have to say to them, you're right, it doesn't make sense. But this is what it is. It's broken. It's at that point that something's got to give. So this is the idea of resetting.
It's resetting, and I'm looking to see what symptoms will come to let it be quite clear to the common man and woman that this is all broken. It could be bank runs, for instance. It could be people redeeming their CDs, certificates of deposit, that where they have a 12-month or a 2-year or 5-year commitment on the money submitted to the bank, taking it out of availability. Okay, reversing the certificates of deposit. I don't know how you call it in England and Ireland. We call it CDs in the United States. I still think of myself as an American. I'm still a U.S. citizen. I've just been out for a long time. And believe me, it is not as bad in Costa Rica as California, as New York, as New Jersey, as Michigan, as Ohio. Texas and Florida, about the same. We've had no food shortages whatsoever in Costa Rica. We have no sharp price rises. We have no big problems at all. Okay, we're going to get bank runs. We're going to get CD runs. We might get runs where people say, I want my money out of the stock market. We might see mutual funds, pension funds, and insurance funds pulling their money out of the stock market. It could be that the big bag holder for stocks and bonds is going to be the Fed, which is really controlled by the Department of Treasury. That will be a signal that things are breaking in a wide open, recognizable manner. Bank runs.
When the Fed steps in and starts buying stocks, is that what you're suggesting?
Well, they've been doing that for a long time, but I mean the only buyer.
Right.
They've been buying stocks for a long time. Don't kid yourself. Look at all the corporate reverse buybacks. Okay, the Fed's doing the same thing. The Fed is a big buyer of the S&P. What they do is they short gold and buy the S&P. They sell gold and silver and they buy stocks. The Fed is doing this. The Wall Street banks are doing this. The New York Fed is leading the whole parade. We're already in breakdown mode. So it becomes a question of how far do we break down before people won't accept your dollars at a car parts store. Sorry, we don't want the dollar. We're reading on the news what they're doing behind it. We're not there yet, but are we close?
But if we talk about the reset, okay, a couple of questions around the reset. What do we actually think is going to change as a result of this reset? And how do we prepare for it now?
The change will come in the form of a different structure of the dollar, some kind of a legitimate backing, and I believe the blockchain used for bonds.
Okay.
The blockchain is going to be a very important, not concept, but structure to eliminate bond fraud. It's going to be impossible to defraud with the blockchain structure. That's going to be part of the reset. I think we're going to have a gold-backed dollar, but I got a warning for people, and I've been saying this consistently. You cannot have a gold-backed dollar unless you bring back industry to the United States. And one of the ironies of this COVID economic destruction from lockdown is that other economies might be so damaged that their economies are as weak as that of the United States with respect to deficits, trade deficits. The United States has to rebuild its industry in order to eliminate a trade deficit. Otherwise, they're going to shed 10,000 tons of gold in the first year from a trade deficit as a result of having a legitimately backed currency in the dollar. Can't do that. So there's got to be a reset for the economy. We need to trigger the rebirth and renaissance of the economies. And so the reset might have a very important element with respect to new industries, new technologies, and new energy systems. You got the energy monopoly, oil and gas. Why have they been suppressing electric cars for so long? Because they like the profit from oil and gas. Now you got a big deal going on between Canada and the United States with respect to Rockefeller oil or shale oil. Let's not get into the fact that shale oil is all produced at negative profit. Everything is broken, Dave. Everything. The reset is going to have many, many parts. One of the, how do I describe this? Extremely ambitious aspects of the reset is to have a catalog of all assets, a catalog put on national blockchains. And I say, well, that sounds great. It's a great goal. I don't know how they're going to achieve it. They're lofty goals and initiatives. We've been told in the last 2 weeks that the global currency reset had begun. But I heard that it had begun back in January and December with the transition of the SWIFT code transfers, fund transfers. SWIFT got. Remember, there was a time about 2 months ago, there was a time where for 24 hours, SWIFT transfers were halted.
Right. Okay.
That was when a transition came over to the quantum financial system.
Okay.
And I was told that that was part of the global currency reset, GCR. If it doesn't have an acronym with 3 letters, it's just really not official and not credible. Okay. So I think the global currency reset began a while ago. And it was felt in the form of the SWIFT transfers, bank-to-bank transfers, which, by the way, it's 30 years obsolete. Why do you think crypto is doing so well? Well, you can have a transfer in under 15 minutes. And you can do a funds transfer that's really quite cheap. Well, it's not that cheap. SWIFT is a lot cheaper than Bitcoin. I can tell you right now. You want to buy some concert tickets with Bitcoin? Good luck with under 20% fee. Right. And that you don't get a 20% fee on a funds transfer. You get about, 1% fee, 1.5% fee, $30 on 3,000. What's that? That's 1%. This currency reset is in progress and has many, many parts to it. I think one of the big things that I'm looking forward to that's guaranteed to be part of it is that the silver price will be at least double or triple. and the gold price will be at least double or triple. I think we're going to see a bigger jump in silver. It might be a double for gold and a triple for silver.
Mm-hmm.
And here's a very subtle, interesting point that my colleague, I call him Euro Raj. He doesn't want his identity known, but he's in the United States and he's not American born. He's a very smart, very generous guy. He said, Jim, notice that every time we get a quantum jump in the precious metals prices, the gold silver ratio comes down.
Yes.
It was at 110 peak a year ago. It was ridiculous. Got down to about 70. Let's just say 70, give or take 75. The next quantum jump will be down toward 50. And that'll tell you that we're not done yet because they need it to come down to 25 to 30. And I said, why is that, Raj? What's the big deal? And he said, the petrodollar derivatives, the dollar oil price is linked to precious metals by means of a 30 to 1 ratio of gold to silver. The petrodollar is linked to precious metals via the gold silver ratio. Whoa, that's a bit heavy. And it tends to explain a few things. So Maxwell from Luxembourg, my new trusty Central European banker source, said, we're on the verge for another jump up in precious metals prices. The shortages now dictate it. The disruptions dictate it. The controversy dictates it. So we're going to be heading toward a 50 to 1 ratio, like 2,500 gold and 50 silver.
Okay.
Give or take.
Yeah.
So that's my perception of the reset, Dave, and it's messy.
I do think one of the overriding themes anyway, in terms of precious metals, is that we are actually on the cusp of seeing a move in precious metals. If the reset goes ahead, you're particularly favoring silver over gold.
Yes. Yeah.
And ultimately looking for the 30 to 1 ratio in the gold silver ratio.
Long term, but we're not going to get it in the next jump. If it's 2,500 gold, 50 silver, that's 50 to 1. And then you need another jump like to 100 silver and 3,000 gold.
Okay.
These are just guidelines.
Yeah.
A lot of people look to the Elliott wave jumps. I pay attention to them. They're not ironclad, but they make a lot of sense. We're going to get into uncharted territory, but just so people can get a better grip of how suppressed things are, if you take the 1980 highs for gold, and you take the 2011 high for silver, we need to go up tenfold to get to the same levels.
Yeah.
Okay. We've got inflation that's grotesquely underreported.
Yeah.
We've been calling it 2 and 3% when it's been 8 to 9%. And that keeps the bond yields down, and it keeps the Social Security payments down, and keeps the deficits in check. But now nothing's in check.
Now, just before we wrap up, actually, Jim, for anybody watching this video, you have your own newsletter, your own website. How do people get in touch and sign up to read more of your stuff?
Well, it's www.golden-jackass.com.
Okay. And
we actually had a revamp in January 2 years ago. So we got 26 months now with the new website. It's looking good.
Well, listen, what I'm going to do, Jim, is I'm going to put a link to your website in the description below this video. So anybody that actually wants to connect with you or have a look at your stuff in more detail, click on that link.
Sure.
And sign up for Jim's stuff. Thanks for watching. And if you enjoyed this video, I want to encourage you to watch this must-see interview with David Brady of Global Pro Traders. It's packed full of market insights to help you make better investment decisions. Go watch that video next. And if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now.